Now, the Greek bailout has not calmed investors' concerns about contagion, including those right here in the UK. For more on this, I'm joined now by Charles Goodhart, a finance professor at the London School of Economics. He's also a former member of the Monetary Policy Committee at the Bank of England. Even this latest bailout isn't really settling the markets. So if I can turn to you just and ask you a little bit more about what we're seeing in Greece. You, a little while ago, proposed a kind of a dual-track currency. Can you tell us a bit more about how that would work?
Well, if this financing deal should collapse, and it might for one reason or another, then there'd be a question of what the Greeks could possibly do. And a default, I think, would be totally disastrous for them, and leaving the euro would equally be disastrous. So our proposal was that they might do a kind of dual currency in which they use their scarce euros to meet their external commitments, and meantime use an IOU, an internal IOU, rather as Californian and some of the Argentinian states did, in order to meet their internal commitments. So it would be a dual currency, and the internal currency would fluctuate compared to the euro.
Right, and so that would effectively devalue their internal currency.
Exactly.
And that presumably could be used elsewhere if we see this problem in Portugal or even Spain. Well,
if these kinds of financing arrangements which are being put in place work, then that will end, at any rate, the immediate need to consider a rather messy exercise such as a dual currency. And it would be very messy.
It sounds it. And do you think that it would work, though? I mean, do you think that the current bailout is going to be enough?
If the current bailout is put in place, it will be enough to meet their immediate financing problems, not only this year, but for the next year or two. The problem is that it doesn't meet their adjustment problems. It doesn't deal with the problem that Greek, in part from having too large a deficit and too large a debt ratio, are very uncompetitive. And if they actually cut back the deficit as fast as being required, they're just going to go into an appalling deflation.
So is the euro then fundamentally incompatible, having countries as different as Germany and Greece in the same currency?
Without having a common fiscal system, which does provide support for those parts of the euro which are in difficulty, and without having a common political system, a single political system, and with a degree of national concentration, the fact that the Germans and the Greeks have almost been getting at each other's throats in terms of media, it's very hard to see how this is going to survive this particular test. And the general view is that the euro system has either got to have much more integration, or parts of it will fall by the wayside.
Looking a little closer to home, to the UK now, you were a signatory to the Sunday Times letter. What do you think? We're 2 days away from a general election here. When should the deficits in the United Kingdom be cut?
Well, as soon as you can start on this. I look at what has been happening to Greece, and our deficit numbers are actually just about as bad as Greece. We're one of the worst. Our debt ratio is much less bad, and the maturity of our debt is much longer. So we've got more time.
And you don't think this is going to lead to the double-dip recession and cost jobs, as we're being told it might?
The monetary policy should be employed to prevent that happening. And in any case, an announcement now of a credible package will take quite some time to come into effect. So what I'm been arguing is that the earlier you announce a credible package, the better. And you can continue to use monetary policy as a counterweight, and I think that that would be desirable.
Just before we go, do you think there's anything that's likely to happen at the Bank of England decision 2 days after the election?
I think it depends very much on what the outcome of the election is. I mean, there are various kinds of, hung parliament that you can have, and we'll have to see what the market's reactions to whatever comes about.
You certainly will. Thank you very much indeed for joining us this morning.